Now let's focus on the other hot space in the market, and that definitely is, metals, in particularly steel. Watch out for the stocks because a lot of them are very, very excited. You would imagine that a lot of it perhaps has already played out, but no, there's still more gain. JSW Steel in the pre-open 4% higher. SAIL is about 3.5% higher. Let's pull up Tata Steel as well. Yeah, there we go. About 2% up there as well. A long-standing demand of the industry, and it seems to be finally coming through. So what does this actually mean? How much of it is going to flow directly to the EBITDA line for these steel companies with the safeguard duty in place? Parthiv Jhonsa, head of metals and mining research at Anand Rathi Institutional Equities, is joining in. Parthiv, thanks very much for taking this call. Now, I think we're just waiting for the final notification from the Finance Ministry. But I think from the market perspective, it's pretty much a done deal. 12% safeguard duty on flat products for 200 days. How much does it help?
Hi, good morning. Thank you for having me on the show. To start off with, the flat steel price had already been rallied about 1,700 to 2,500 over the last couple of weeks, right? Right now, the scenario was that your domestic mills were trading at a premium to the landed cost to the China and FTA countries. And with this 12% coming in, you can further expect close to about 2,000 to 2,500 kind of a price hike in a very near term. Historically, we have seen whether it be India, whether it be Western countries, whenever there is a ADD or a safeguard duty in place, usually over the next months, the price usually increases in the range of about 10 to 15 odd percent. So right now, say for example, your flats are at about odd 50,000 odd rupees, you can straight away expect about 2,000, 2,500 rupees kind of a hike in a very near term.
All right. And if you could give us some sense, what is the price difference between the current landed prices versus the domestic prices, and will this 12% make up for that? Additionally, if these companies go ahead and increase their prices, will there be enough demand to drive volumes, and what could the concomitant impact on EBITDA per ton for these companies be?
Sure. I'll first take your first part of the question, right? What's the difference? Right now, we are trading at about 3 to 4% kind of a premium to China. And when you compare to FTA countries, we are trading at about between 5.5 to 7 odd percent kind of a premium. With this 12% coming in, this gives a leeway to increase the price by about 4 to 5% as far as the parity is concerned, right? But usually it does not happen. It's usually better than that, number one. Number two, the demand is holding up quite well. We interacted with a lot of channel check networks also. December, January, the data is out. The consumption was over 13 million tons. So the data, the consumption data is good right now. There has been a data from a lot of other sectors that, construction, infrastructure, this is like the peak quarter for them as well, right? And usually Q4 is a best quarter. As far as your flowing down to the EBITDA is concerned, there has been reduction in the coal cost. There has been your iron ore is holding steady, and with this increase in realization, say by next maybe 1 or 2 quarters, you can straight away expect a good 10 odd percent or maybe better than that kind of a EBITDA improvement across the ferrous sector on an EBITDA per tonnage basis.
EBITDA per ton, roughly speaking, 10% across the sector. But Parthiv, if we break this down, two-part question. In terms of ferrous stocks from this, this measure that's come through, which one benefits the most? There was some analysis that was pointing out how maybe Tata Steel, etc., the ones with greater, flat product array, they'll benefit more than, say, a JSW Steel. So who benefits the most from this particular development? And otherwise, in the ferrous space, what are your topics?
Okay, you rightly pointed out, Tata has about 76 odd percent kind of a portfolio which is into flats, followed by JSW, which is 71%, followed by Steel Authority, which is about 60 odd percent, and then you have GSPL out of the top 4 listed tier 1 mills, right? Again, Tata Steel in a very near term has some benefit with this entire EU quota system playing out, right? With their entire EU presence. So yes, Tata Steel in near term looks to be good. JSW, on the other hand, they are enhancing their value-added product portfolio going forward. So that also looks good. As far as my top picks in the entire metal and mining space is concerned, and especially, from ferrous perspective, I'll try to break down in 2 parts. It's JSW as far as your tier 1 mills are concerned. But on the mining side or the ancillary support side to the ferrous space, I even like companies like MOIL because they would feed in the material for these ferrous players.
Right. And basis valuations and, the kind of price moves that we've seen over the last 7-8 days, these stocks have outperformed the broader markets in general. Where do you see maximum delta? If one was to say bet on 3 metal stocks, what would your top picks be?
All the 3 flat producers, major flat producers, that is JSW, SAIL and Tata.
All right. Thanks a lot, Parthiv, for joining in and putting things into perspective. There's still room for 5 to 6% sort of price hikes coming in, and the net benefit on the EBITDA for all these companies per ton could be well over 1,000 odd rupees, clubbed with the price hikes and also the lower raw material prices.
Let's just see how stock's doing at the pre-open. Let's just have JSW, Tata Steel, SAIL, etc. on your screen now. So higher. SAIL, of course, is up about 4%. I think that was seen as perhaps having the biggest delta to this announcement. Tata is up. I mean, otherwise it's up 1.5%, 2% in that range.